We are looking at the single biggest inefficiency in the crypto market right now. I'm going to show you a blockchain that has more daily active users than Solana, more than Tron, and sits at rank number 2 in the entire world for activity. Yet the market has priced it down at rank 40. The project is Near Protocol. The price action has been brutal, I know, but while the price has been sleeping, the fundamentals have quietly hit a historic milestone: 1 million transactions per second. We are sitting at a mathematical floor on the chart, a massive symmetrical triangle that is about to snap. The data says this is a coiling spring, but the chart says danger. I'm taking a specific position right here, and I want to show you exactly why. Let's be real about where we are. Near Protocol is trading around $1.60. If you have been holding this bag for the last year, it has been exhausting. It is not that other coins are printing millionaires left and right. It is that everything feels stagnant. We have seen liquidity dry up and attention shift to newer, shinier layers, leaving solid infrastructure plays like Near to bleed out slowly since March. But this boredom is the smart money's best friend. Retail investors leave when the price goes sideways. Whales enter when the price hits historical support. We are currently testing the zone between $1.50 and $1.70. This isn't just a random line. It is the structural support that held the entire market up in late 2023. We are back at the start line. Before we look at the trade setup, you need to understand what you are actually buying, because the market is completely mispricing this asset. Number 1, the tech is finished. The team just proved they can handle 1 million transactions per second in a real sharded environment. With the version 2.10 upgrade, they have solved the scaling issue. While other chains are still talking about roadmaps and future promises, Near is shipping a Ferrari engine today. Number 2, look at this chart. 2.6 million daily active users. That is real network demand. Yet Near is valued at a fraction of the chains it is beating. This divergence, high usage, low price, is the definition of an undervalued asset. Number 3, the user-owned AI narrative. This is the catalyst nobody is talking about yet. Near is not just an L1. It is becoming the privacy layer for AI. They partnered with OLLM for confidential computing, and they just launched Near AI, which allows private, encrypted interactions with AI models. They are betting big that privacy will be the next major narrative for 2026. And finally, Near Intense. They have launched cross-chain bridging that is invisible to the user. You don't see the bridge, you just move the money. This solves the fragmented liquidity problem that plagues crypto. When you stack these 4 pillars, the fundamental value is undeniable. Now, let's go to the 2-week chart. I'm ignoring the daily time frame because it is too noisy. We need to see the institutional structure. We are trapped in a massive symmetrical triangle. The resistance is this descending trend line coming from the $20 all-time high. It has slapped the price down every time we tried to rally. But we have this orange ascending trend line support coming from the lows of 2020. We are literally getting squeezed into the apex. Price is currently below the key moving averages, the 10, 21, and 55. That is objectively bearish. Momentum is down. However, look at the volume profile. The point of control is at $2.25. That means the fair value, where most volume occurred, is significantly higher than where we are now. Price has a habit of reverting to the mean. Also, the Fibonacci RSI is flatlining in the oversold zone. It's not curling up yet, which means the bulls are still hesitant, but the downside momentum is exhausted. Here is my exact strategy. I have a load zone right here between $1.50 and $2. We are at the bottom of it. I'm buying this support because the risk to reward is skewed heavily in my favor. However, I'm not blind. I have a hard stop loss at $1.25. If we get a weekly close below that level, the multi-year uptrend is broken. The triangle fails. I'll exit the position immediately. There is no point in hoping if the structure breaks. But if this trend line holds, which I believe it will, the upside targets are clear. Target 1 is the descending trend line at $2.50. That is a 50% move from here. Target 2 is $4. Third one, the golden pocket at $5.70. That is the 618 Fibonacci level. If we hit $5.70, I'm taking heavy profits. That would be a nearly 300% gain from this entry. Then $8 and $12 next. But these are only playing with profits. So here is the game plan. We are betting on a convergence of price and value. The fundamentals say top 5 chain. The price says top 40 chain. That gap has to close eventually. The risk is a Bitcoin breakdown. If Bitcoin dumps, NEAR will likely lose the $1.25 support. That is why we use stops. The reward is that we are buying the fear. We are buying when nobody cares. If the rotation back into high utility L1s happens, NEAR is the first one that should run because the metrics are undeniable. The data doesn't lie. But the market can remain irrational for a long time. My job is to position myself where the math protects me. I'm accumulating here with a tight stop. If you want to track this trade with me in real time, I post my moves and daily market updates in my Telegram private group. It is completely free, link in the pinned comment. Also, I broke down another AI project that is showing similar on-chain strength. You can watch that video right here to compare the setups. Much love for watching till the end, never financial advice, and I'll see you in the next one.